Markets love a political strongman, just as they hate uncertainty. The unexpected clarity of the election outcome in Turkey, which gave the AKP party championed by President Erdogan a parliamentary majority, saw Turkish assets soar today. Currency jumped 3% against the dollar, its best day since 2008, and it even briefly returned to where it stood before the Chinese devaluation in August, which spooked emerging markets so much. Shares positively leapt, rising 5.5% to have their best day since 2013, while the yields on Turkey's dollar bonds came down sharply and are at their lowest since May. Now, as a reaction to the surprise poll result, it goes a little deeper than just buying the new certainty. It isn't just that a potentially destabilising third election is now off the table. On top of that, Mr Erdogan didn't gain the supermajority that he needs for a referendum on bolstering his power, so he won't in fact be the strongman that he hoped. Knowing the party in charge tells us little, of course, about Mr Erdogan's post-election priorities, so there is still quite a lot of uncertainty left. Turkey's grappling with a renewed battle with its Kurdish minority and with a flood of Syrian refugees, and of course faces war just over its southern border at a time when it's being treated as one of the least appealing of the emerging markets by international investors. This chart shows one reason that investors have shunned Turkey: its current account deficit. These 5 countries were dubbed the Fragile Five in 2013, when their shared need for foreign financing left them as the most exposed to the sudden strengthening of the dollar. That, remember, was the time of the taper tantrum. Now, since then, all 5 countries have reduced their current account deficits, although I should say that Brazil's reduction is pretty tiny there, and it got a lot worse before it started to get better. But Turkey's been in a uniquely bad position. It has the biggest deficit, and that comes even though it's also, together with India, been helped by plunging oil and other commodity prices, because almost all of the commodities they need have to be imported by the 2 countries. Now, back in 2013, all of these countries were sold off together. But as the troubles of emerging markets intensified, investors became more discriminating, and politics became one of the critical factors. Now, this becomes pretty clear if you look at the extremes, India and Brazil. The rupee, here in blue, has held its value very well, beating many other emerging currencies. Like Turkey, it's been a big beneficiary of falling commodity prices. But unlike Turkey, investors absolutely loved Prime Minister Modi's talk of economic reform in India, and they also loved the effort to adjust the current account. Now, Brazil, down here at the bottom in green, suffered horribly from the commodity rout, and as well as that, it's also engulfed in political turmoil, with discussion of whether the president might be impeached. And of course, as we saw on the previous chart, its current account has steadily worsened before just very slightly improving a little bit recently. Now, Turkey has been lumped in with Brazil on the politics and economics. It's been given very little credit for the commodity relief from being an importer. You can see the Turkish lira here in red. Like the real, it's rebounded a bit recently, but it's done significantly worse than the rupee, lost more than a third of its value since the start of 2013. Now, there's quite a bit of uncertainty still about Mr Erdogan, whether he might come out and use his political fortress to switch the focus of what's going on in Turkey to the economics. If he does that, Turkey might be able to move itself a little closer to India's popularity with investors. On the other hand, Mr Erdogan could use his newly strong position to continue persecuting opponents, taking advantage of the lack of outcry from European leaders who hope that he'll halt the flow of refugees to the continent, or that he could become more deeply involved in Syria, which would also be probably rather worrying from an international investor's perspective. Today was a good day for Turkish investors, but the country's deep problems haven't gone away, and it would take a really strong man to heal the divisions in Turkish politics, society and economy.